Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock with news the Aussies may be about to tighten bank capital rules. But first, the latest US Fed statement was a tame affair. They're sitting pat while the effects of their flat first quarter works their way through the American economy. Advanced first look data out overnight showed that the US economy barely grew in the first quarter. It was up on an annual rate of just 0.2% in that period. Set back mainly on adverse weather conditions and a surprisingly strong savings rate. That follows a 2.2% economic growth level in the final quarter of 2014. The Fed sees the slowdown as transitory. American consumers stayed at home. In fact, they're getting into the habit of saving more, it seems. Their personal disposable incomes in the February data released overnight were up 4.5% above the same month a year ago, whereas their personal consumption expenditures were up a more modest 3.3%. Their personal savings rate was 5.8% in February, the highest it's been since the end of 2012. This data may help explain why their economy sagged in the March quarter, but their stock markets boomed. The savings data may also explain why their housing market is picking up. March house sales rose to their highest level since 2013, a positive sign for their housing market and showing it is emerging from a soft patch. Across the Atlantic, the ECB released data that showed loans to private sector companies rose in March for the first time in 3 years and apparently ended a long credit squeeze. It also added signs that the Eurozone banks are recovering from their crisis that began in 2008. In Australia, APRA, their banking regulator, said it is willing to act sooner rather than later to require their Big Four banks to hold higher capital against mortgage lending. It is a move the RBNZ should be working towards as well. The low capital requirements needed to support mortgage lending is a key reason for both sharply rising lending for housing and dangerous levels of bank leverage. Australia is also facing a glut of overbuilt apartments, something that could have credit consequences here. Back in New York, the US Treasury 10-year benchmark yield jumped today and is now at 2.07%. The rise was a direct result of the dovish Fed statement. We're likely to see similar rises in New Zealand swap markets here later today. US oil price inched higher and is now at $58 a barrel, while Brent crude is also slightly higher at $66 a barrel in trading today. The gold price fell, however, to $1,202 an ounce. There was a big gold swap deal reported overnight between Citibank and Venezuela, all done at a discount. Venezuela is having trouble buying its groceries. New Zealand dollar starts today off yesterday's highs at 77.1 US cents, at 96.1 Aussie cents, 69.4 Euro cents, and the TWI is now 80.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.